is ripping.
My tummy hurts.
Pretty good, right bad.
What is going on, guys? It is Nick with Off the Chart Trading. I'll be doing tonight's video for Tuesday, January 18th. Is it 2023 yet? We're off to a fairly rocky start to the year. So let's dive in. Let's take a look. I wanted to start with the NQ because I think that's the one that needs to be front and center. And, you know, normally because of the profile and everything, I mainly gravitate and focus on the ES, you know, the S&P and so forth, because it is, you know, from a pie chart perspective, it is probably one of the more balanced one, even though you have, you know, Infotech XLK as almost 30% of the S&P. You know, NASDAQ is almost all 100% tech-based stocks. So that being said, some of the heaviest, biggest stocks are tech. So goes the NQ. Eventually, you know, the ES will get dragged down with it. So let's just dive in. I want to look at the bigger time frames because I think that's kind of the, you know, where the what am I trying to say? I was going to say, you know, bigger picture, basically where it's printing and how we're looking at it. I can't remember what I was going to say. I was going to use a saying, and as soon as it goes from my mind to my mouth, it disappeared. Common problem of mine. But anyway, let's just dive right into the daily. We talked about it last week. You know, we had that squeeze fire long, or he's looking all right, and then kind of just falling apart. And this, I think it was that day. I think it was the 10th when I did the video. I talked about the mat. It was either that day or the 11th. I don't know. I'm too lazy to check the calendar. But this was a crazy turnaround. I mean, this was a 400-point move from the lows back up and actually finished green. I forgot what the NQ finished up, but it was like 20, 30 points. That's a massive move. And the next day there was follow through, and just like that, we were seeing normally what we would see when we do end up getting, oh man, this is it. We're breaking below X, Y, and Z, and this and that. And, oh, we're breaking below the 50, and then boom, we're back up. And oh no, here it is again. This is it. This is, you know, Y2K. This is the financial collapse. This is everything doom and gloom, FUD, you name it. This is what we've been looking for. And then boom, rally back up pretty close, almost all-time highs. This, you know, as far as a stretch, is the longest one I've seen in a while. That low compression squeeze firing short. So I think it's safe to say for the daily, once again, depending on what time frame you're looking at, is going to ultimately depend on, you know, where the EMAs themselves are. The indicators that we offer on the site for free for members, I have that plugged in. So you know where the 8 EMA is, the 21 and the 34. So you don't necessarily have to, like, you know, look right here and try to get it. You can see right there, and they update real time. So, but anyway, we've been below the 34 for a while now. We did close above the 8. So we did attempt to go higher after that massive rally, and then we're literally back to those levels. If this trend continues, once again, that low compression squeeze firing short, I think the 200 on the NQ makes sense. Minimum. I mean, we're talking the room, and obviously no one really knows, and it's all going to be hindsight that, you know, you start building out down here, and it's like, oh man, we should have gone short here or even here, and you feel that, you know, you've missed the boat, but then, it, you know, it's kind of like Billy Mays, but wait, there's more, you know, it can get a lot worse. And anyway, I think we'll see how the 200 reacts. It would be surprising if we don't hit it. I mean, we are so close. So I think shorts will attempt just to see. I always talk about price exploration in the sense of, like, picture a kid, you know, trying to sneak out. It's dark, tiptoeing into the kitchen and seeing if they can get, you know, to the cookie jar. I mean, that's how I look at short pressure, because, and mainly for the profile too, you can kind of see it, how it builds out and so forth. But the point of all that is, it's sneaky. It's like, well, let's see what happens if I do this, or poking a bear, you know, no pun intended, but just to see how far it can go before it gets, you know, smack in the hand or the lights turn on and scatter, that type of price action. And that's kind of what we're seeing now. You know, just more aggressively to the downside. So I think the 200 is next up. I think that would make the most sense. Bigger cracks in the ice would be the weekly chart and the monthly chart. We'll take a look at the monthly after this. But once again, my color-coded candles, I feel like That should be every time I say that, you guys should take a shot. I don't say it much, maybe 1 or 2 times a video. So unless you're a lightweight, but I feel like I mention it every video, I guess self-advertising. But I think it does paint a picture that we've been just straight up. I mean, where do you see red? Down here, which was March lows and so forth. Got that 8/21/34 white buy arrow, and then we just been off to the races. Oops, did not mean to do that. And then what do we have here? Hello. I mean, we broke it last week, and it looked like the same setup that we're seeing now, like it was going to get real ugly. And then we broke all the way back up above the 8 and kind of settled right at the 21. A little under it, but pretty close. And then where are we now? Well, starting, this is obviously a weekly candle, but we're continuing. We are technically below the 34. And just for perspective, you don't really see much red. I mean, from all the way down here with the frickin' NQ, it's crazy to think that it was down to 5,000 not that long ago. And then you add a 1 and change in front of it. Basically a 1 in front of this, and that's where we're at over the last 5 years. Because as you guys can see, this is a 5-year, 1-week chart. No reason for that. I just feel like, go back a couple years and look at a weekly chart. I think that's more than enough. But you can always make it a 10-year or 15, 20-year, whatever the case may be. But for just perspective, I mean, this chart is 90% green. You have little bits here. And I was talking about it in the room, some of you might maybe weren't trading back then, but towards the end of 2018 is where it got really ugly, and that was the Fed messing with stuff, and then finally was it the Powell put or whatever? I think that was the first or second week of January, and then we were kind of off to the races. Or was it over here? Maybe it was the end of the year. I can't remember. I think it was February or January is kind of where they called it the Powell put, and we were kind of off to the races after that. Kind of like, all right, yeah, maybe we'll slow down a bit. But this, I remember trading through this. I lost a lot of money because buy the dip did not work. It might have worked for a day or for a few days or whatever. And that's the thing that can kind of be deceiving and choppy is, you have a week or two like this, and then, you're back up over here. So if you were short over here, you're underwater, and you go long over here, and you try to hold the calls for 2 or 3 weeks, and then you're underwater. So this is chop, but, ultimately a downtrend. And I remember October and November was just really, really tough. I think we had, the trade war, and we had the Fed. It was just a mix of stuff, and it felt like it lasted forever. But realistically, in the grand scheme, we zoom out once again, bigger picture thinking. It was only like 2 months, 3 months. And you say only, but when you look at 5 years, you kind of say, well, if you did sell, or I can't take the pain anymore. If you just held a few more months, boom, you're at all-time highs. So, and then you all know a little bit of selling, and then boom, more all-time highs, and then some selling, and then boom, more all-time highs. And obviously March was kind of its own, black swan event, but still the same thing is, we basically undid a year and change of action. It's the end of the world, and boom, crazy more new highs. So my point is just to be cautious here, because how, in perspective, I try to make trading as simple as possible. How many red candles, red bad, green good, will we potentially see? Will it be 4 or 5, 6, 7? Could we come back down to 12,000? Could we almost from the lows to this? I think that's where Ed was aiming for, was 12,000 or even lower. I was saying it was more on the monthly chart, which we'll take a look at. A little above that. Nothing. I don't think we would drop that much, because I think overall, macroly speaking, is that a word? Macro view? I don't know. But bigger picture, I think we're okay. Ultimately, I just think this is a taper tantrum, and people reevaluating, just market caps on certain stocks. Is this really a 30, 40, 50, 60, 100 times forward looking? No, maybe it's a 10. And ultimately, I think it will all balance out like it always does, because once again, that's history. I'm not saying that it's gonna drop and then massively we'll be back at 18. We'll be at 18,000 or 20,000 quick, but this is the first sign of weakness we've seen in coming up on 2 years. So does it do what it's done always? Does it get bought up and then we're back up? I don't know. I've been saying it, and I mentioned in the Facebook group earlier, replying to somebody's comment, and I've been saying it for, I think since November of last year, so 3 months now, that this is, you either have a very long-term outlook, meaning, I love this stock, it's 75% off, I'm so happy I could buy it at this price, I don't care if it drops another 10, 15, 20% from that initial buy-in, because I like that price, and I don't care what the market does, I'm going to hold it for 5 years. A Kathy Wood approach, if you will. Or, You're scalping, you're day trading, you're catching the ebbs and flows, the plus 1,000 ticks, the negative 1,000 ticks, and you're in there. And we've been pretty good at it. I mean, this is definitely, volatile markets are good for futures trading. I know Ed's been messing with a bot that's been working for him, and even when he's not using it, he's been doing well. And myself too, I only took one futures trade today. I made a quick $200 on the NQ. Looking for a bounce once we hit support. I forgot exactly where it was, but I was using the ES chart, but I was trading off the NQ, and it worked. And like I said, yeah, granted, if I held an extra 3 or 4 minutes, it could have been 500, 600, but I just look for those quick. I see a setup, I take it, and I just look for 200, 300, whatever it is, and I just call it a day for the futures account, because that one and done approach I think is the best. And it's quick. I'll call it, I'm like, all right, guys, boom, boom, we're out. But that's the way I like to trade the futures. But anyway, we'll take a look at the monthly chart, which is another. I mean, look at that. That's just craziness how fast we. I was talking about this back over here and back over here, and I mean, just how far we were. People call it home base, whatever you want to call it. I call it, people say the 20, but I use the 21 EMA. How far we've, once again, March lows. And funny enough, for that whole month, we actually closed above the 21. So when's the last time we've seen was it cyan? I just want to say teal, but cyan color was back in March lows, and before that one month in here. So is this a 1 month event, or does this actually get a little more ugly? What the color change means is that it's below the 8 EMA right now. So is this the start of something a little more aggressive? Possibly. When I talked about it earlier, everyone's always we all just throw numbers out, but I wouldn't be shocked if, the selling does pick up, that we could drop another almost 1,500 points. That would not be fun to sit through, because most of my portfolio is, growth stocks that I'm like, wow, this is amazing. It's, I love this stock when it was 60 and 70, but it was just too rich for my blood I don't want to own 5 shares or 10 shares, but oh, great. Now that stock's $7 or $6. So you start buying it, and, 3 weeks later, it's at $5 and then $4. And it's like, geez, you thought you got a great deal, but it's 50% from where you bought in. So, I'm already feeling the heat from that. I think that it will eventually obviously slow down, and there'll be just like the ebbs and flows of the markets. It's, I got to get out of small caps. And even though that was the flavor of, not so much last year, but the year before that, all that stuff was up. All those innovation, all those future tech ideas were going crazy in 2020. Cooled down, first quarter, second quarter of 2021, and then here we are. The bleeding continues. So eventually they'll get beat down, and shorts will cover, and then they'll wheel people out on CNBC saying that small caps are in favor, and then energy drops, and then maybe the financials or whatever the case may be. That's how the game's played. Complete opposite of what a regular retail trader does, because a retail trader sells it down here saying I can't take the pain anymore, and then they feel like they're going to miss out. They're waiting for that pullback, and then they buy the highs. So I'm sure everyone has done that before, but when you step back and realize that's how the game's played at the simplest point, that you should buy low and sell high, I like to say, you buy on red days and sell on green days. And luckily, I guess I should say luckily, it sucks during the day, but as of right now, there's been a lot more red days than green days. So I've been, nibbling on a lot of my strong conviction plays, almost 70 of them, which members have access to. And I recommend, if a member is watching, look at that list, because you might have heard a ticker and I liked it at 40, and now it's, 10 or 12 or whatever the case may be. So granted, I have, I think, a decent buy-in in most of them, but obviously I think I'm underwater probably 80% of the stuff I'm in. But it's fine. Like I said, a 5-year outlook, I'm not too worried about it. But like I said, more to the point, that this may not be an issue. Look, one month, and then green. So maybe we come down to 15,000, another 200-point drop. We trade sideways. Maybe Powell comes out and says something, and then we're back up to all-time highs. Or do we actually end up seeing a legitimate correction, which, going back to even here, you don't really see. You have a couple months back in 09, which is obviously a whole thing, and then boom. That's the last time we've seen a red candle below the 34. But obviously, look at the price of the NQ, this is just a crazy chart. I mean, technology's advanced and everything's accelerated and stuff, but from March lows, it's just been straight up. So to see overall weakness is not too crazy. And this is just something to say, this might be the tip of the iceberg, and we could drop a little bit more just to, cool it down, which I've been calling for. It's not fun to sit through, but it's not healthy to be at all-time highs every single month, so maybe we come down to the 21 on the weekly. Maybe we come down, 14 14,500, 15,000 for that psychological number. Who knows? No one knows. People, oh, it's going to go to 20,000. Oh, it's going to 10,000. It's the end of the world. Maybe somewhere in between. Obviously, no one knows exactly. But anyway, I just wanted to show that. I think NQ is, primary focus for that. No reason to really look at internals. Nothing too crazy. Put call surprisingly is not that high. I'm just looking at the corner of my eye, just shy of 0.8. For me, how I look at it is anything below 0.40. That means a lot of people are bullish, and the lower that number goes, the chances and the probability of a pullback over the next couple days, maybe the next couple weeks, no more than probably 2-3 weeks at the most. Especially if that number gets to like 0.2, you open up at 0.2 on a Tuesday. There's a strong probability that you're going to have a pullback either the next day or the day after that or sometime that week. So we're not at extreme levels, but anything above 0.8, I consider that a lot of people are piling in bearish. I would love for it to get to 0.1. I think that would be an extreme level, the equivalent of it being at 0.2. And market typically likes to, that's its job, to try to screw over, pile everyone in one way. And it's like a boat. You have everybody on one side, or a scale, if you will, whatever analogy or, metaphor, whatever you want to envision when it comes to a lopsided in this, market environment. Once everybody's piled in short, kill them, Short covering rally activate and everybody goes long, and then vice versa. Everyone, euphoria, this is amazing. You can't lose money. Market only go up when Lambo. That type of mindset, and then you kill them. So I don't know. I think this market's been pretty hard for retail traders, which honestly, I hate to say it, I've kind of called for. I've noticed a lot of screenshots and the circles and people zooming in on their profits. That's kind of slowed down. I haven't heard, anything about the new, I was going to say the S word, but I'll say the C word, crap tokens that are going to go to, $1 million because of whatever. That seems to have been, incredibly slowed down, which to me is a good sign. Piculation, whatever, that's like, I can't take it anymore. My tummy hurts. I have an IV drip of Pepto-Bismol. That's what I want to see in this market, because that's typically a sign of a bottom. Not calling for it tomorrow or the next week or whatever, but I like to say when everyone's talking about something, typically, it's hard to time the market, but you do the opposite. I made a joke about if I had, a certain family member or somebody text me about crypto, that would be a sign of a top. And then sure enough, I got a text and I sold all my crypto about a week later. And that's when I think it was back there in the summer, this past summer, and crypto dropped about 40% about a week or two after that. So that's just what I'm talking about. When, your Uber driver has the next hot, crypto, or, you got to check out AMC because it's going to the moon and it's all over the internet and stuff. That's typically a sign that you're reaching those high levels. So I'm seeing a lot of retail excitement drop. No more cheerleading because most traders have not been. I think most retail traders and probably majority of people watching this have only been trading from here to here. And as you can see, there's been a lot more trading going on. So it's easy to trade these types of markets. It's hard when you actually end up seeing some red and some volatility. So traders, can take advantage of that with futures and day trades. And we have people in the room killing it all the time. Okay, guys, this looks like a potential reversal. Boom, plus 1,000, plus 2,000, whatever the case, everyone's account size is going to be different. So that number is going to be relative to the individual. But being able to play the ebbs and flows of the market intraday, I think is key in these types of markets, because if you really like something long, great. But it sucks when you see it just dropping. What do you do? Stay long, stay the course, stick to your plan, but then also, day trade it. I'll give you a perfect example. Lucid. Tomorrow the lockup. I went short. I'm up a couple $100 or whatever. This is my biggest holding. Anybody who knows me knows I've been a huge fan of this stock ever since, $12-13 to the end of last year, technically going on 2 years ago almost. Actually, no, yeah, it's hard. When you hear just the year changes. So I'll just say a little over a year. When we first were, there was rumor that it was going to be loose. I'm like, man, that'd be amazing. I'd, buy it, but I don't want to buy the rumor. But we day traded and stuff, and obviously I started, starting a position in the, I think 28 range, and then average down. Really went crazy on 9/1, which was this week. And then I got my average down to $18, and it's been a pretty good stock. And considering everything going on, I figured this stock would have got hit the worst. especially since companies that are not profitable are getting hit. But that's the beauty of when institutions own 75-80% of a company, they're not going to sell. They're looking 5-10 years away. So I think that's also helped. But the lockup period is tomorrow morning. And just as an not to say intraday, because obviously I held it, looking for a hedge. So keep an eye on Lucid tomorrow. If you guys are not in it, there may be selling. I don't think the PIF is going to sell any, but I think there's another 13% of the lockup, which I think equates to millions of shares. So, and then also algos and high frequency traders and the self-fulfilling prophecy of today there should be selling, and if the market is red and all that other stuff, then Lucid might get hit $2, $3, $4, $5. So I'm just planning ahead that if I do end up getting hit in the head, I'm still going to be long the stock, but at least I can maybe make a few grand off that idea. So that's one for you to maybe keep an eye on Lucid for tomorrow morning. Let us take a look at the profile. It's going to show a gap down because the future is technically traded yesterday for a little while. Not much action. It was pretty flat. And then obviously today we had that gap down. Prices being accepted lower, which obviously is not bullish by any means. We ended up not going out at the lows, but M periods towards the end of the day. And sure enough, let me refresh this. We didn't go out of the lows, and we did see a little bit of a bounce, but definitely sellers were in control of this market today. It wasn't super violent, but breadth ratios were some of the most negative readings we've seen in a while. And there's a good amount of volume down here too. So VPOC was a little higher. VPOC was above half back, but I don't really put too much weight into that. Time, TPOs, most time spent was over here. And then so far tonight it's been, came back, didn't really take out these lows. And we're kind of building out where we spent the most time and then staying, actually almost everything over here. What is that? Oh, settlement, where we ended up going out. We're kind of just, we're down 5 or 6 points. We're up 4 or 5 points. So kind of just balancing out here. But as that happens, as you see the profiles, you're finding acceptance lower. I always think of it as a bell curve. Where's the meat of the move? If it's in the middle, but it's lower from the previous one, then obviously price is being pulled down. Once again, that, price exploration, if that's even a thing, is once again, hey, can we take it down here? Okay, cool. Prices are being accepted. We're not rallying back up here. We're not filling this gap. So, why would I cover my short if majority of the time and the volume is spent down, towards the end, the lower part of the profile? So, what was it? One of the levels for today, which worked for a while, and I think that's might be where I played the bounce, was that 45, 72, 75, which was also the low from 110, which we were talking about on the NQ, and then also, pretty close to 1221. The way this is going, we might actually take out, I don't want to say take out, but at least attempt minimum 45.20 at this rate. So we'll just have to see how tomorrow plays out. Like I said, it's not looking good, but we'll just have to play it literally one day at a time. Anyway, as always, hopefully it's helpful. If you guys want to reach out to us, head over to Off the Chart Trading. You can fill out a little thing. It will email us, try to answer your questions if you want to. Also, check out our Facebook. I'll add the link to that in the description. Like I said, be safe. Once again, if you're an investor, remember why you're an investor. If you're trying to be an active trader, remember why you're being an active trader in this market, and just stick to the plan. I know it's tough when you look at your daily P&L and you're like, oh, that hurts. Oh, man, I undid, 6 months of work or whatever the case may be. It's tough, but I will say the biggest thing that will make you a successful trader is your mindset, defining your risk, and position size accordingly. I talk about it every day. It's almost like a triangle. And if you, focus on those three, there you go. That is literally the holy grail of trading. You didn't have to pay a $5,000 class to hear that, or, click the link below and like and subscribe or any of that nonsense. Like I said, it's tough. And I think it's important to be around a group of people that see the same thing, especially if you're watching this and you aren't a part of a group that legitimately cares. I definitely recommend checking us out. So anyway, on that, I'll end the video. And you guys have a wonderful night, and I'll see some of you guys in the morning. Take care.